it there has been an impulsive move for 15 months. So from this point to this point, it went up in impulsively, and this period was around 15 months. So after this, you can see there was a corrective period that has lasted around 5 plus years, and this is a slow and massive move, and this is still not over. So you can see that corrective period are greater than the impulsive period. The best time to invest in a stock is when the stock is in impulse, and when it is correct in a corrective phase. So you have to identify the ranges, and between those ranges you can invest, but this is very tricky as you never know when price can reverse to the other end. So now let us see how this corrective phase begin. So correction is minimum 3 waves, and it can be 5 waves also. Normally in this case, the pattern that was formed was that this was the W wave, that is fast. After this W wave, you can see there is the X wave came in a triangle, that is A B C D E, and this was a corrective move for this W wave. After this, we again got an impulsive move down, that was a Y wave. uh, After Y wave, we can always expect one more move down, because when it is WXY, there is always high momentum. So after Y, we can always expect one more move down. But before moving down, it will move up for a corrective phase. Now you can see in this case, it again gave a pattern of WXY, which was the X wave. This X wave and this X wave will look almost identical and may take the same time. And once this X wave is over, you can see you can have that next Z wave, which is again a down move. So now let us see this on a monthly chart of MGL. Now you can see this is a fast impulsive up move, and you can clearly identify this is one fast down move and this is one fast down move, and in between all this is correction. So you can also label this as WXY. Now it's the point is that it's not about the labels. Some may label this and some may label this, but you have to identify the difference between an impulse and correction. Now if you go to the weekly chart of this, as I was expecting this is a correction, and now at this moment I was expecting an impulsive move down. But and now I will look for a pattern or some negative reversals on this case, as it was there was a pattern known as head and shoulders. And if you see, I had already recommended this in Quora on, see, you can 11 months ago, I had already recommended it, that gas stocks, the MGL was trading at 1,000 at that time, and this was 11 months ago. And that we can see lower levels in the gas stock, both MGL and IGL was trading at 476. And after that, if you see, from these levels, it went to 680 levels also. The low you can see is 665. So this is how a convection can help you in your trades. Like in this case, I was expecting an impulsive move down, and I saw one pattern, negative pattern, and on that I can make a prediction. Now let us see exactly after this move. After this move, if you see, for this is an impulsive move, and this move does not look an impulse to me, and this is also a corrective move. So after every impulse, if you're getting a corrective move, you can always expect one more move down. So this is how impulse correction and impulse work. So if instead of this impulse, now suppose this move like this and again goes up, then this may change to an impulsive move. But as of now, this looks like a corrective move. And if you have to label this, see, this is the impulsive move. This impulsive move ended here, and it is a corrective move for this impulsive move. And you can see this is one wave, this can be labeled as A, this is a correction for this, so this can be labeled as B, and this is the C wave for this. So once this C wave is over, you can expect one more move down in this case. But this can change, because now suppose in future this we are expecting price to again break this, and this does not happen, but we will still see some new things on the chart, maybe some impulsive move, and we have to correspondingly we have to update our labelings, and but we have to always see the difference between impulse and correction. This is an impulse move, this is an impulse move, and this is a correction as of now, and now we can wait for the next impulse down. Similarly, we can see now one more stock, IEX. This stock, if you see, I had already taken a webinar, and this was taken on 10th June. And in that, I can see that you can see the price is 182. And in that, I had said that this is a corrective move, and for this impulse, we will expect one more move down. Now, if you see the chart, now current value is 142, and from 182 it has fallen to 182 within 2-3 months. The reason is simple. If you see, this is a fast impulsive move, this is a corrective move, and again we are expecting one more move down. For every impulse, if there is a corrective move, we will expect one more move down. And this simple, if you are able to recognize this simple structure, then it will be very beneficial. Now see, after this, again we got one impulsive, again we got one corrective move, and again we are getting one more impulsive move down. Now, if you have to invest in stock like IEX, so what is the pattern that you should be looking? After this impulsive move down, you are expecting, whenever you will get one fast impulsive move up, and then followed by a corrective move, then you are expecting one more move up. So this is the buy setup you should look for in a stock that is in downtrend. Because now let us see why that is the case. Because if you see on a monthly chart, there is an impulsive move, and this is a correction move for that. So now if you compare the long term chart of this, you can see the impulsive move, it went on from 19 to 2021, and now this correction can last more than 2 to 3 years, because as you see in case of MGL, the correction time was more than the impulsive time, and this is a fast moving wave. After this, if you get a corrective wave, you can expect one more move down. So on a larger time frame, this stock can underperform for 2-3 years more. But now this is just an assumption as of now, and you get something different, then we will trade it in a different way. But if you are, I mean, using Elliot waves, then as per convention, this is a fast move, and it should be followed by a corrective move and one more push down on a monthly time frame. This correction on a weekly or daily may give some movement in the upside, and we can trade that, but we have to careful how the higher chart is saying to us. So as you see now, for on a buying on a pullback for a daily chart, we have to look for some a pattern. Let me show you how. So basically you have to see for an impulsive move up, like in this case, in case of downtrend, there is an impulsive move followed by corrective move, and then you get the next impulse. So similarly on the buy side, look for an impulsive move followed by a correction, and then the next we have to trade this next wave. Now let us see other gas stock, IGL, which was also predicted at 476 levels. You can see at this moment, below this there was a head and shoulders pattern, and it fell to 315 levels from that. So there was over 176 point fall after the prediction, and you can see again in this stock, this is a fast move. So this is the impulsive move. After this, what you are getting can be a corrective move, and we can expect one more move down. Now let us go to the intervals of this correction. You can see this is a fast move, and this is a fast move. In between there is a correction. Now if you compare the MACD levels of this, let us go to the daily chart. You can see between this impulse, and if you compare the MACD at this point and MACD at this point, there is no divergence, which means we will label this W, X and Y. This is a Y wave, which means for every, whenever we get a pattern like WXY, we can always expect one more move up. but 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 WXY itself is a complete structure, which means there is no guarantee that we will get, but we are expecting one more move up. But because the larger impulse is still down, let me again repeat, this is an impulsive move. For this impulsive move, we are getting a correction of WXY. This correction can change into WXY, XZ, and then again for this impulse, we will get one more impulse. Instead of this, we can also get a pattern WXY and again one impulse. So we have to look which pattern we will get, and but we are sure that if this is impulse, this is a correction, we can expect one more move down. But on a larger time frame, if you see, this is an impulse and this is a correction. So maybe 2-3 years from now, we can again expect, see, this is an impulsive move, larger time frame, and this is a correction. So after this correction is over, we can, for this impulse, we can again expect another impulse move. So this is how you have to scan what sort of structures are there in the stock and how can you trade them on a larger time frame. So now if you see, let us now go to the minor details of this. See, after this head and shoulders pattern, prices again is taking resistance at this level. Now, what are the possibilities? Now, if you draw a trend line from this point to this point, now this correction will be over once you get a break below this. And that is the time when you can expect the impulsive move down from this level. And this impulsive move can break this level also. But there are cases when this impulse will end below this, before this point also, and that is a special case that we have to handle. Now let us see another stock that was asked to me was the Piramal Enterprise. And now let us go to the higher time frame of this. Now the stock was in an impulsive move from 2009 to 2018. And how fundamental analysis comes into picture, we're using Elliot. Many times people say that Elliot waves is not, cannot predict the long-term future of a stock. But the truth is, whenever the stock is, the fundamentals are good for the stock, the impulsive move will never stop. And the big institute will always know that the fundamentals of this thing, stock is strong. So they will keep on moving this stock up. And whenever they are expecting now the stock has grown much and there is no possibility of growth in this stock as of now, so they will keep, the correction phase for this stock will start. And this can be seen in the when stock breaks this impulsive move in the down and it will be in a corrective phase. So during this time, you will often see that there will be always disappointments in results, maybe any negative news for these stocks. And this is a monthly chart. So whenever stock is in a correction in a monthly chart. As you saw in the MGL case, it is in a correction for 5 years, and I mean it's not rising, and you have to always make sure that you always buy at the right levels. Otherwise you can fall, I mean you can enter at a wrong time and price can reverse. So you have to, the best time to invest is always on the left side when the stock is an impulsive move, and in this time the stock will be moving up only. But when a stock is in a corrective phase, so if you bought at this level, it will go down, and if you bought at this level, it will go down. So you have to identify what is the range of this stock, and what is the best time to invest. So I think we can stop here, and if there are any questions, you can comment on the video, and we can look